The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Every day we come here together live between 2 and 3 p.m.
The following takes place between 2 p.m. and 3 p.m.
every day here at TFNN. And of course, we take a... Oh, okay. The engineer thinks that we've got to have the little 24 sound effect behind the back part of it. I cut it off because I thought it ran a little long. Anyway, what else do we have going on out here today? Well, we've got a market that's been up, been down. High of 2020 on the S&P cash. Low is a 2004. Right now we're running off in 2015. Volume is, we were talking about 2.5, 2.6 billion shares on the New York Consolidated Tape yesterday at this time. We have 2.2 billion right now. So volume is moderated, of course, much narrower trading range. I don't suspect that there is a great deal going on. I wrote in my newsletter that I am no Nostradamus today. I came up with a new name. And M&M's got Slim Shady, and I am now Nostradamus, Dave Us. I've got to say it probably a few times till I get it right myself. Nostradamus. I'm going to be doing some long-range predictions, but those predictions are pretty much based on a worldview that says things are probably spinning more out of control than are in control, that on the inflation-deflation side, I'm leaning to either stagflation or deflation. That means that all commodities, no matter what they are going lower. And I think we can see in the last couple of days, looking at the movement in crude as a good indication that it's going nowhere fast. I know probably some of the worst traders in the world. All of them are all telling me how gold is going higher now. Doesn't mean that you are if you're thinking gold's higher. Just that I have some people that normally I will always take the other side of. And that's always got me kind of thinking that maybe that whole deflation argument is the right side to be on. Of course, the indicator that has me thinking that we are hours, days away from blowing away 100 on the dollar index, which would take us to 103, is the dollar index today up 61 cents. For the continuous contract at $99.48. 2015, did we get a bounce out here? What would, and how are these political prognostications going to come into effect? But I can't see that the problems that are in the Mideast with the Saudis and the Iranians wind out one in the next couple of weeks. My guess now, though, is the Saudis are going to be forced to push as much oil as they can out to start building a huge military. Now that the United States has made it abundantly clear that it is not going to help. In fact, it's going to help the Iranians against the Saudis. I think that's a probably clear presentation about at least the U.S.'s political gains for the rest of this administration. That all the people that have been our natural allies for a long time probably can't think that they can depend on us, and they're going to have to act in their own best interests in the near future. Normally, those had to do and were in line with what ours were. But it looks like that's going to be farther and farther from the truth as we go into this year. And I think probably we're going to get realigned next year. But this year, I suspect that politicians, world events are going to tend to spiral out of control. And a lot of people will think that they can control them. But as crowds, if anybody's been in a crowd that's gone insane, knows that it becomes incredibly quick to come out. But the Saudis have to spend a huge amount of money, start building up their military. I suspect that the $100 billion that they most recently got is not probably going to go to its people. It's going to go to buying everything that they can to support a military. And that just means things are probably going to heat up. In the Pacific Rim, of course, we've seen that China has built aircraft carriers made of sand out on reefs out in the ocean. And yesterday they started landing some of the first aircraft on those. So they have their own portable aircraft carriers out in the ocean, and they're going to use those to dominate its region of influence. We've got the Russians pretty much getting knee-deep into the Mideast with their Syrian stuff. So we've got a lot of moving pieces. We've got literally hundreds of new submarines that are right between the Taiwanese coast up through the Spratly Islands. All it's going to take is somebody quick on the trigger to light a spark, and that will not be an easy flame to put out with all the other problems that we have. But let's get into a little history here.
That it's all just a little bit of history repeating.
On this day in 1999, Amazon.com announces that fourth quarter sales totaled $250 million, up more than 200% from the same quarter a year earlier. Never mind that the company is gushing red ink everywhere. The stock surged $6.18 to $1.24, not $1.24, $124. Now, it had huge volume, but fairly soon it would hit its high in zenith. Within a year or a year and a half, it was back down to $10. And one of the big ones, of course, in 2000, the Barron's article right after New Year's was probably one of the headlines of all time to meet things like Dewey Trounce's Truman. It was Amazon.bomb instead of com. But who would know that that would be one of the stocks that people could have held it for 15 years later only to become a big success. But stocks go up and stocks go down. What else do we have? Oh, we're going to talk about my subscriber event when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And the S&P's at 2016 up 4 points, 2.26. I suspect that we're going to take a few days to let this pull out. And of course, earlier today on Tom and Tommy's show at 10, they brought up that the Chinese have let it be known that, of course, everybody that was going to be able to sell on the 9th, I think it was the 9th or the 8th, won't be able to. And that may have stabilized the little markets for a little while. But at this point, I imagine that if you've been stuck in the stocks in China already, you would have just rather taken the pounding and maybe getting the cash back, and maybe you could make it back. But this way, you're stuck in a stock and you can't get out. I always like those Roach Motel ads for the, what was that? Trying to remember the name of the company now. Always remember the symbol for it. Can't remember the name of the company now. Raid, yeah, Raid. Roach Motels. Roaches check in, never check out. And I guess that's what happens to your money in China. But again, I warned you, didn't I? I told you several times that I would not be invested in Chinese companies. Did everybody listen? No. Hopefully you did.
I informed you thusly.
Yes, I did. I would not be invested in Chinese companies. Anyway, you know, those are people with more than 5%. So, of course, there's still people to sell out there. But I was thinking, isn't it kind of stupid for them to do them, do that? Shouldn't, if you had 5%, shouldn't they let you sell like 10 or 100 shares a day or something, just so that there's more of a market, at least some level of feedback instead of zero feedback? But I don't know. Anyway, we were talking about before the break, joining me on January 20th. I'm going to have a subscriber event to people that either subscribe to the Path of Least Resistance or the Tech Insider. I'm going to be talking about how this year is probably going to be a big deal for shorting, but not only that, how I'm doing that and how I've worked to get a new data tool and how to make that data tool actually do something for us. Short data has been notoriously laggy and incredibly noisy if you use the current stuff. And we'll be talking about the tools that do that. In fact, I think they'll be sending out an email in the next day or two, if they haven't already, talking about the subscriber event. But it's going to talk basically about the structure of how reporting is done on shorts and what I will be doing to make it better for my subscribers. But you can learn. You can also get in on a free 30-day trial of either newsletter by going to the front page of TFNN.com and setting up for that. I've already placed several trades, and they seem to work out fairly good, at least for the first couple of days of this year. And we'll continue to keep an eye on that. I've been hoping for a little bounce, and we got it. We're up about 7 points now to get maybe a few more positions on there. If there was anything that I disliked about the last couple of days was that I didn't short more on Wednesday and Thursday. But I think we've got some time out here. Of course, if you were in the den yesterday during Tom's show, I was going through a huge amount of earnings, and those earnings start within a week. So we're already into the earnings cycle out there. The question is, and I guess a lot of the question is, how much will the stronger dollar, especially last quarter, really hurt these companies? A lot of people say, well, they've already hedged that out. They've already hedged that out. Well, hedging only works if you hedge out before it happens, not after it happens. I gave the example today of buying a hedge is like buying house insurance while your house is on fire. If anybody truly knows that it's on fire, your rates are going to probably be more than the insurance would actually be worth, even if it burns to the ground. No one's going to give you, if the house is on fire, no one's going to give you a deal. And everybody's known since the dollar went off of 80 that, and the way the currencies tend to work is they tend to continue on a nice little trajectory until they are done. And I don't think that they are done any way whatsoever. But anyway, that's it. Again, I wanted to talk just a little bit. Smith & Wesson and Ruger both popped fairly decently today. And, of course, everybody's got their own political opinion. I don't know if I was actually trying to get guns off the street, if it isn't a little ironic that every time someone tries to get them off the street, they force hundreds of thousands of more onto it. I think I would at some point wise up to the fact that the more I blow my mouth about that, the more people buy guns. I don't know. Guess there's no stops in politics because it really doesn't matter. But what I am going to say is this is going to be a year where politics intersects the market to a great deal. People are going to have their own views of the world, left or right or center, or in my case, libertarian. But that is going to continue to be a problem, and politicians are going to try to incite us, both their opponents and their supporters, to get them to the polls. It's going to be a tough year. I'm going to try to do my best to make sure that I don't needlessly irritate people. But it's not going to be a market where you're going to be able to separate the wheat from the chaff. We're going to see movements just like we see in Smith & Wesson a great deal as everybody launches salvos left and right about things in the market. My guess, though, is probably if you were looking for the biggest political move that we would be looking for this year, it has to be in the pharma and biopharma. That's kind of quieted down for the moment. But my guess is that we get into early spring or summer when everything is probably settled down about which two candidates will be running for president. We're probably going to hear a great deal more of that. So let's try to keep a cool head above us and know that a lot of times the political theater is there for nothing more than to irritate us. On this subject today, I will quote the record in the Supreme Court for violations of amendments. And currently, the administration has lost 18 times, I think, to the 20 times that they've gone in front of the Supreme Court when they've extended way beyond the scope of what the original constitutional framers have done. And hopefully they will also make sure, with their infinite wisdom, that the checks and balances of the executive, the judicial, and of course Congress continue to be at least acknowledged, if not outright tried to be ignored. Anyway, for the most part, most of those things that have been done have been forced back. So we will not worry about it too much at the moment. We will be back and start to look at charts in the next segment.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to start looking at some stocks here in this segment. Make sure and give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always push a message in the den if you want me to have me look at something. American campus communities. We talked a little bit about this yesterday. I wanted to see how this responded on an up day after a down day. Starting to see a lot of stocks in this sector act like maybe they've put in a top. Now, yesterday we kind of spiked the American Campuses Community of high of October 28th, $41.58, and got into $42 with half the volume. Pulled back into the trading range today, trying to push back up to that high. 551,000 so far today. So we're going to continue to push on these. And of course, first thing you always want to do is start looking at earnings dates, because of course this one's February 22nd. The reason why is we are going to be in the earnings cycle, and we're probably going to be into mid-February before that earnings cycle is over. Heads up on these. A lot of them in the past have held up to the highs on light or nothing volume into earnings and gone either way. Haven't been really able to make a good indication for many stocks of doing that. What else do we have out here? Got some stocks out here that are kind of penny stocks that look like they're kind of running out of some volume. And Terry's Pharmaceuticals. That is, what is that? November 6th, $1.22, 1.7 million shares. Just 1 million shares in all the carnage yesterday. And a nice little hammer candle out here right now. Anyway, Cindy in Reno, Nevada is calling in. And she says that she likes Chinese.
I like Chinese. I like Chinese.
She really didn't say that. I just played it. How you doing today, Cindy?
Hi, David. I'm doing great. I love your show. And
Okay.
I want to say a question, because my real name is Cynthia, and I'm very cynical.
Okay.
But in the press, they say that if you buy Chinese stocks and you own them, they're not allowing you to sell them. And
If you own more than 5% of a company.
Oh, okay, because I was imagining if I wanted to go buy some Chinese stocks today, someone would have to sell them to me, so I was kind of confused. Like someone has to sell them to, like if you can't sell them, I mean, how can you have a buyer if there's no one to sell to you?
Well, the problem is there's not a real market, right? Because the Chinese have taken all the big holders out of it, so you really don't know what they would want to do if they were able to buy or sell, right? As far as they're concerned, they can't. So what you have is a handful of retail buyers and sellers that are creating the market now. And that's not the real market that would be there if everybody that owned the shares could get into it. So that's the real problem, is that you have a market that is as phony as a $2 bill, because you don't know what the real price, real supply and demand would be in the markets. And that's where everything gets problematic. And of course, we were just talking about at the beginning that I think it was on Thursday, they were supposed to be able to, the 6-month period was supposed to be up. And it looks like from a Bloomberg article that is not going to be over. And maybe they've got another 6 months that they're going to have to hold those stocks. The thing I'm saying is, do not be surprised if one day China has a bunch of people invested in their stocks, and it isn't just people that own 5%, but it's anybody that owns anything. They just say your money is ours.
Well, that sounds like spooky hocus pocus to me.
There's too many stocks out in the world to have to worry about companies that, one, you can't check their financials, which you can't in Chinese stocks, that the people that are actually supposed to be checking their financials, these big analysts, don't do it either. I've played many clips of that when we were talking about VIP shops. No one has any idea what they're owning over there or what it is. And that is always a recipe for disaster. Any other things I can tell you?
No, but thank you so much for helping me smooth out my question in my mind, because it's kind of
I will and continue to will say avoid all Chinese stocks, Baidu included.
Thank you so much.
You bet.
Bye.
Robert in Chicago. How you doing today, Robert?
Hey, David. How are you?
If I was any better, I'd be twins.
That's a beautiful thing. So I was going to look at or ask your opinion about Avago.
Avago?
I don't know how to pronounce the name.
Yes,
AVGO.
it is a major supplier to Apple. And what's your question on it?
Okay, in regards to that, is this a major player in all of the cars? Dashboards?
Well, if they're going to have stuff in them, it is. Here is the problem that I would say that you have, and that is Avago makes what is probably, let me put it this way, there's few things in tech or semiconductors that doesn't eventually become a commodity product. And that is the problem. You're getting kind of long in the tooth for the things that Avago makes for cell phones and wireless communications, but mostly it's cell phone and cell phone data kind of communications. And those things just over time, more people start making them, prices start to come down, and that's the real problem is the margin on these. When you look at Apple, it's one of the few companies that has ever been able to hold, for a retail product, 60, 65% margins, as high as 69% on their iPhones. Intel's been able to do it on an individual chip, but they have almost a virtual monopoly. The question is, how long will companies like Avago be able to keep their margins up when other people make chips that aren't, it's not in a monopoly, right? You can buy other chips from other companies that do the same thing that Avago's chips do. They may do it better with lower power, but eventually, for most of the time, the other companies will eventually get very close to what Avago does, right? And at that point, what happens, and that is margins, or Apple will go, you know, we could use Broadcom's chips instead of yours. They're $5 less. And since we sell 70 million phones a year, if that $5 less becomes $350 million to us, we're going to use the $350 million cheaper chip. So not only do they lose the business, but they lose, the margin. They either lose the margin or they lose the business. And that's the real problem with what I'm going to call aging technology. You want to hang on through the break?
Yeah, great. Thanks, David.
Okay, we'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new Yield Pledge money market account with funds from another financial institution, or deposit new funds into an existing Yield Pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their Yield Pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back with Robert in Chicago talking about Avago.
So, David, thank you for offering, shedding light on that, the commoditization of the chip. So here was my trade. I was considering entering around 135, and my target on the upside would be 149. You don't see that.
First of all, we'd have to have a market that would make some kind of bottom.
Okay.
And I don't see that. I'd like, especially today's move, I'd like to see it cover, first of all, 3/4. Let's say the markets were headed higher, which they're not. Just for this gap, I'd want it to get down to about 133 and fill about 3/4 of that gap. Then I'd probably make that gap, the bottom of that gap at about 131 or whatever it is.
Okay.
I would make that probably, if it closed below it, more than maybe 50 cents or a buck, that would probably be my stop. Now, here's the downside to it. You've got a major monster sell signal on this company. The previous high was June 1st at 149.68. It had 11 million shares. You got to it on December 7th, the day that will live in infamy, at 149.72. 4.4 million shares. It went above it. It closed back in it. It did it on less than half the volume. This is a short opportunity, in my opinion.
A short opportunity around 149.
If it ever got back up there, my guess is that you're probably looking at this thing, if it would do well, back up to 145. I suspect that the next chapter in Apple and cell phone manufacturers and everything are going to be that Apple's going to see its margins start to fall a little bit, and that you're going to see them put pressure on Avago to drop their margins a bit. And this whole industry that's built up around cell phones is going to slowly get commoditized. And I think we've already seen parts of that this year. I think we've got Apple making a fairly decent long-term top. It's hard for me to see where, I think 3/4 of the profits, I'd have to go back and look at this company, but I think the last time I looked, 3/4 of the profits had to do with cell phones. So you're really making a bet on the cell phone business getting better and margins improving. And I think while you can say that maybe more cell phones are going to be sold, it's hard to see that Avago is going to be in this business. I can also see them losing a great deal of business because Qualcomm basically dropped their shorts for the Chinese and licensed them all their technology. So I have a feeling that Avago, that used to sell to some of the manufacturers like, was it Xiaomi, which I think is the biggest one in China now, the third largest cell phone manufacturer, is going to be able to take those Qualcomm designs and put them in there for a fraction of what Avago is charging. So that I don't see I mean, you want to be in the upswing of this, not in the mature part of technology.
Right.
There's a pretty famous bell curve, and I've shown it here a few times before. Let me see if I can find it on the web right now. Christensen, just bear with me for a minute. Bell curve. See if he's got it. Disruptive innovation. I'll try to find it maybe during the break. Anyway, he's got a nice bell curve, and it talks about early adopters for any technology. And then you've got kind of people that really get in on it. And then you kind of hit the top when everybody's kind of getting in on it. And then that's when the margins really start to fall off, and you're on the back half of that bell curve for disruption and innovation. And that's when margins just kind of continue to slowly dissipate until it becomes a completely commoditized business. And I wouldn't say that there's a lot of technology that will disrupt what they do. And I like companies in this business because it is, at least in engineering, it's kind of what they call the black arts, which is RF radio frequency stuff. Digital stuff, just about anybody can do. These guys do a lot of RF stuff, radio frequency stuff. And sometimes it's just luck that they get stuff to work. And so if someone's trying to copy, it's kind of tough. But that's where I'm saying that Qualcomm's real dropping their shorts and giving the store away to China and licensing their stuff out didn't really do Qualcomm a lot of good. And the reason why is most people don't think the Chinese going to give them, they're going to report, they're going to sell 1 million and report 500,000, right? I mean, that's been my experience dealing with them. You always had to worry about any kind of design you wanted to have built there. You really had to worry that they weren't just going to copy it. You're going to find 20 different versions of it for sale in the Far East. I mean, that's a problem, a smaller problem for Apple, but that's still a problem for Apple. You can go into many stores and find Apple knockoffs, a great deal of the places in China. And that's where it's just a horrible, slippery slope if you think you're going to go there and make a bunch of cash. So between Qualcomm giving away the store, that now means that especially companies like Xiaomi and to a lesser extent Samsung. Samsung makes all their own parts now, which is a whole nother problem, right? I think there's only one part that Samsung doesn't make in their own phone. They don't go to either Qualcomm or to Vago. So, it's I am reticent to start getting long stocks in the very last innings of probably the bell curve of technology and what these guys have. Anyway, does that answer your question? I think technically it looks rather poor. Anytime I see a high that's tested on half the volume, I really want to pull the trigger short. And just the rest of it doesn't look good. And I'm not bullish on the market either.
Perfect. Thanks very much, David.
You bet. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I have a question in the den. I'm not exactly sure why is building your own parts a problem, Dave. It's not for Samsung. I'm just saying it's a problem probably for Qualcomm and Avago in that they will not have to have those people won't have to buy parts from anybody else. So if you're looking at the traditional gang of about 7 companies that provide Apple with their parts, and other cell phone manufacturers too, but for the most part, Apple, what are they going to do? If they can get one cheaper, they'll do it. I'll guarantee it. But normally what happens when you start getting your margin squeezed is you start going after your suppliers. And I suspect with Apple that that's what we're going to see. In fact, I think with Apple's earnings coming up fairly soon, that is exactly the reasons we're going to start seeing problems in Apple. And we saw them kind of in the beginning stages in the last earnings. Let's look up their earnings date so we have it. Okay, January 25th for Apple. So, you know, they had been for a number of years through the iPhone 2 through 4 about 67 to 69%. It got down to like 67% last time. My guess is they're going to be more in the 65% range now. And of course, we also saw a big change in the way that billing came. It went to that monthly billing. We haven't seen a lot of effects from that yet, i.e. paying for your phone as a separate line item. But my guess is that we're going to see fewer people, not more, upgrading to the newer phones, as the newer phones just aren't that much different for most users. I think you're going to have a good business. So I'm not saying that Apple's going to $50, I just think that you probably have a better chance going into earnings seeing Apple at 92 or 91.48, that previous low from August 24th, I think it is, isn't it? Yeah, the August 24th low, than anything else. So that's it. I'm just, everybody that's been all over this sector has been it. But as time goes by, companies like Broadcom, who don't get the same kind of business that Qualcomm did, or Avago, or some of the other companies, but whether it's a camera component that goes in these smartphones or anything else, as time goes by, your bigger company like Apple will beat on you. They'll say that other companies can give them the same product for less, and generally that's true. And that is why that as products get cheaper on the backside of that bell curve. In fact, I'll write a note to myself right after the show. We'll go through that. But Clayton Christensen, I think that's the one who did it, actually put together the bell curve of different cycles in the market to let you know when a market was mature and when you were going to see the downside. But that's when you start seeing things like sound bars for Christmas that are $80 and everything else. The components in there is probably not a lot of difference, but as volume increases, costs get cut. And of course, as things get tighter for the manufacturer, they'll go after the speaker manufacturer or the component manufacturers that go in things like sound bars for your TV sets. And those people are notorious. They're kind of like Walmart. They're always beating on you for a better price or free shipping or everything else. Those are horrible businesses, as far as I'm concerned, to be on the opposite side of somebody like Walmart, because they're always hammering you for lower prices. That has not been an issue so far, but I suspect that it is going to be an issue as Apple tries to keep their margins up as pressures continue to hammer on them. And of course, as I've said, lots of companies out there are making products like Avagos. And if you're in China, the one thing that truly matters is price. And if you're a big company like Xiaomi, which is spelled with an X, so if you ever see it, it is Xiome, I think. Just keep an eye on it. But they're the third largest manufacturer. They quickly dwarfed and put a bunch of the third-party cell phone manufacturers out of business in China. I think that they are learning some of the lessons that we've seen here in the United States for technology. Anyway, we didn't get to all the charts. We'll get to more of them tomorrow. But have a safe and happy Tuesday. Remember to sell when you can, not when you have to. Also cover when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.